Good afternoon, Tushar sir.
Hi, good afternoon. Kem છો?
I'm fine, sir. Good afternoon, Karthikeya bhai. Yes, sir. Fine, sir.
Hello. Okay. Hello. Good afternoon and warm welcome all of you to join today's webinar on latest Supreme Court judgment in direct and indirect taxes. One of our ex-president of India, late Sri Abdul Kalam, said that learning gives a creativity, creativity leads to thinking, thinking provides knowledge, and knowledge makes you a great success. With this thought, may I request to the President of SGCCI, Mr. Ashish Bhai Gujarati, to give a welcome address.
Thank you. Rather, good evening, everybody. Chairman of Income Tax Committee, Shri Pragnesh Bhai Jagaset, Chairman of Indirect Tax Committee, Shri Mukund Bhai Chauhan, co-organizers of the today's webinars, Shri Anil Bhai Shah from Southern Gujarat Income Tax Bar Association, Shri Prashant Bhai Shah from Southern Gujarat Commercial Tax Bar Association, Shri Rashesh Bhai Shah, Chartered Accountant Association, Surat, Shri Avinash Bhai Poddar from Society for Tax Analysis and Research, Shri Karthikeya Shah, All Gujarat Federation of Tax Consultants, Shri Mrudang Vakil from Income Tax Bar Association, Ahmedabad, Shri Soham Joshi from Valsad District GST Practitioner Association, Vapi, esteemed speakers at the forum, Shri Tushar Pramod Himani from Ahmedabad, and Shri Jigar Shah, partner Lakshmi Kumaran and Shri Dharan, attorney, Ahmedabad. Shri Dipesh Bhai Shakwala, our own member of Income Tax Committee, invited guests, members of SGCCI, all the participants. A very good evening and warm welcome to all of you to this wonderful session on latest Supreme Court judgment on direct and indirect taxes. Friends, the Government of India has, by the means of direct tax collection, approximately earns around 14 lakh crores. And indirect tax collection for year 21-22 as on 31st March is at around 12.10 lakh crores. The surge in tax revenue has lifted India's tax to GDP ratio for the year 21-22 to 11.7%, which includes a direct tax to GDP ratio at 6.1% and indirect tax to GDP ratio at 5.6%. This is from the ministry sources. In spite of this robust collection, the fiscal deficit of the Government of India stood at 9.3% of GDP for year 21-22, the value of which is pegged at around 15.06 lakh crore. The developing countries like India has a huge need of funds to develop infrastructure, public utilities, government services, armed forces, and other necessary administrative and development expenditure. The FRBM Act has mandated government to control fiscal deficit. As per that, the Government of India has to bring down the fiscal deficit to 3% of the GDP by year 2021, and the total amount of the government debt should not be more than 40% of the GDP. At present, India's debt to GDP ratio is nearly 89%, which is far above than the mandated under FRBM Act. If we closely compare it to Sri Lanka, which went bankrupt, Sri Lanka has crossed 101% this year, which was one of the major reasons for the bankruptcy. Therefore, the situation is also in India is also very grim. We need to be very cautious in our expenditure as well as extra vigilant when it comes to revenue leakage for the government. These figures clearly speaks the urgency with which the government has to work to increase the tax collection, as growing economy needs growing infrastructure and which requires huge finance. The biggest source of revenue for the government is tax collection, and therefore the revenue officers who works to achieve the collection target to fund the development requirement of the country sometimes go overboard in their zeal for better revenue collection, and which results in disputes between the taxpayers and the government. Indian tax law have long been subject to amendments and changes relating to the rate, subject to the text and procedures. Depending on the type of text, there is a minor difference in the procedure to be followed for the dispute resolution. The overall structure of the dispute readdressal system, which is similar to that is three-tiered appellate system, advanced ruling mechanism, and settlement commission. Even at the level of the administrative appeals, in the absence of stringent timeline and ever-increasing number of disputes, the system has been overloaded by almost 460,000 cases pending before the departmental appellate authority. The total amount locked in this dispute before the various courts and tribunal and the Supreme Court is around 12 lakh crore up to 18-19. The initiatives like faceless appeal amnesty scheme has brought down this figure to 5 to 6 lakh crore, but still it's a huge amount. The historical decision taken by the court or any adjudicating authority on any tax dispute becomes a guiding force to decide on the similar cases which comes for the resolution. It becomes imperative for the taxpayer to draw parallel references which can become a guiding force while seeking resolution in the dispute at appropriate forums. Friends, today we have with us the experts on direct tax and indirect taxes who has in-depth knowledge on certain recent judgment made by the judiciary in such tax disputes. I welcome all the participants to this informative seminar on the direct and indirect taxes and hope that this will give you the significant insight to the participants on the same subject. Thank you all and welcome to you, all of you. Thank you.
Thank you, President, sir. Now may I request to the President of SGITBA, Mr. Anil Bhai Shah, to say about the webinar.
Today's webinar speaker, Tushar Bhai Himani and Jigar Bhai Shah. President of CA Association, Sri Rashesh Bhai, President of STAR, Sri Avinash Podar, President of AGFTC, Sri Kartikeya Bhai Shah, President of ITBA, Sri Mudang Vakil, President of Valsad District GST Practitioner Association, Sri Soham Joshi, and delegate friends. First of all, I welcome today's learned speakers, Sri Tushar Bhai Himani and Jigar Shah. I am really thankful to both the speakers for sparing their valuable time and accepting our invitation. Today's webinar is unique in all respects. That is, both the IT committee and GST committee have come together and arranged this webinar. And another aspect is that in both the lectures, the judgment of Supreme Courts are discussed by the speakers. In income tax, more than 90,000 cases were reopened under Section 148. And more than 9,000 writs were filed in the various high courts of the country. And all were eager or anxious about the judgment of the Supreme Court. And Supreme Court has delivered the judgment on 4th May 2022. Another glaring fact is that the Supreme Court has invoked Article 142 of the Constitution of India, and Tushar Bhai will analyze the judgment and its implications. In GST also, the Supreme Court has delivered the landmark judgment in the case of Mohit Minerals regarding the powers of GST Council. Sri Jigar Bhai will analyze the judgment and will also analyze two other judgments. I am sure that you all will benefit from the knowledge of the speakers and cherish the memories of this webinar for years to come. Thank you.
Thank you, President, sir. Now may I request to the Chairman of SGCCI Income Tax Committee, Mr. Pragnesh Jagaset, sir, please introductions of today's learned speaker, Mr. Tushar Bhai Himani.
Thank you, Dipesh Bhai. It's always a great pleasure to introduce one of the great, dynamic, young and learned personality like Tushar Bhai Himani. He's a chartered accountant by profession, also a practicing lawyer, a senior counsel in the Gujarat High Court. He's the youngest at the bar to be conferred the senior designation by the Honorable Gujarat High Court. A past president of the Income Tax Bar Association, Ahmedabad in the year 2015-17. A regular speaker at various seminars, various forums, a lecturer and faculty in various institutions, managerial colleges, law colleges, and is known for his wonderful, sharp arguments before the court and judicial forums. With these few words, I introduce Tushar Bhai Himani. The floor is all yours, sir.
Thank you, Pragnesh bhai. I understand I have time of 90 minutes. Therefore, I have time up to 5:30. And are there going to be any question answers at the end of the talk? If at all question answers are there, then I'll like to finish by 5:20 so that I don't end up eating Jigar bhai's time. With this, question answers are there. Anil bhai, che? All
There
right.
are question answers.
All right. Then we'll try to finish by 5:15, 5:20 so that we finish by 5:30. With this brief introduction, very warm, in fact, hot good afternoon to everyone. Various bodies are there on my screen, and I would like to acknowledge all their presence, including SGCCI, AGFTC, Surat Chartered Accountants Association, and various friends who are available, visible on the screen. Friends, what we have gathered today is an occasion where we would like to discuss and deliberate upon the judgment of the Supreme Court, which has created more problems than solving some. In fact, after a very hectic months of probably January, February, and March, all the lawyers were looking forward to the vacation beginning from 6th of May. And we were hopeful that when we come back, things would cool down. Little did we know that Supreme Court is going to blast a major blow to the entire country by way of delivering this judgment on 4th of May, whereby something unprecedented has been done by the Supreme Court. Article 142, probably in my recollection, this is almost second or third time that in a tax matter, Article 142 has been invoked by the Supreme Court. And that too, for the purpose of remedying a factual situation. Hitherto, I've seen Article 142 being invoked for the purpose of rendering justice in a various legal situations where the laws are not capable enough, they are not good enough so as to meet the ends of justice. And Supreme Court would say that, all right, we will ignore the provisions of law, and for the purpose of delivering the justice, we would presume something, or we would lay down something under Article 142. Perhaps this is for the first time that we are witnessing a factual situation being remedied by the Supreme Court by invoking Article 142 of the Act. So before we actually analyze the judgment threadbare, let us understand what was the context in which the judgment is delivered. Friends, all of us are aware that with effect from 1/4/2021, the law of reassessment under the Income Tax Act has undergone a tremendous change. The entire scheme of the Act is introduced in a way which was again unprecedented. Right from 1961, the law that all of us have learned, practiced, implemented has undergone a complete change, complete overhaul, and a new law, new provision is introduced with effect from 1/4/2021. Now, this law, which was introduced into the statute book with effect from 1/4/2021, was in a way completely different this wise that the earlier procedure, namely recording the reasons, issuance of notice, eliciting response from the SSC by way of objections, disposal thereof, and then proceeding with the reassessment proceedings, is now given a completely new color, a new flavor. Now we have a provision after 1/4/2021, whereby a show cause is issued against the probable reopening action. The response of the SSC is elicited, response is considered, a speaking order is passed, And along with that order, the notice under section 148 is issued for the first time. Now, because of COVID, etc., all of us are aware that almost from 24th of March, the income tax, 24th of March 2020, the Income Tax Act was put on hold. In fact, a large number of other fiscal as well as economic acts were also put on hold. And in substance, the government made sure that the limitation stops running from 24th of March 2020. That limitation was extended from time to time right up to 31st March 2021. From 31st March 2021, again, 2 notifications were issued by the CBDT, wherein the time limit which was expiring on 31st of March was extended firstly from 30th April 2021 and thereafter from 30th April to 30th of June 2021. Now, these notifications were challenged before various courts across the country on the ground that, sir, this extension of the old scheme of Income Tax Act, which was otherwise expiring on 31st of March 2021, cannot be extended for the simple reason that now Parliament has, as I indicated earlier, Parliament has enacted a new law, and that law is completely different from the old law. And therefore, CBDT or the executives do not have the power to extend the old law from 1st April 2021 to 30th of June 2021. Large number of petitions came to be filed across the country, including petitions before Gujarat High Court. And in nutshell, the arguments were that, sir, you can't extend the operation and implementation of the law, which is no more into the statute book. Namely, the old law, the old regime of reopening proceedings have come to an end on 31st of March. By way of a notification, you cannot extend the validity of those provisions. The notification, which draws power from TOLA Act, Taxation and Other Amendments Act, those acts give power to the executives to extend the time limit. That act did not empower the executives to extend the operation of a particular law. There is a difference between extension of operation of a particular provision and extension of time limit. Moreover, it was also argued before various high courts that once a new act is there into the statute book, the old act would cease to operate. That old act would not be there, cannot be considered, cannot be taken into consideration for the purpose of implementation, much less issuance and initiating any new fresh proceedings. Allahabad High Court and thereafter Bombay, Rajasthan, Delhi, series of high courts, almost all high courts across the country took the view in favor of the SAC by holding 2 things. Number one, that when the old act is no more there into the statute book, has ceased to exist, it cannot be applied for the purpose of initiating a fresh provision. And secondly, that those notifications which derive power from TOLA Act cannot have the impact of extending the operation of the old provisions. They cannot override the wisdom of the Parliament. And all the notifications, to the extent they extend the time limit and continue the operation of the old act, would be held ultra virus, and those notifications to that extent were caused and set aside. Now, the lead judgment of Allahabad High Court went before the Supreme Court, and Supreme Court on 4th of May passed an order which is, in a way, I indicated earlier, it's a historic order. What the Supreme Court did was something very interesting. Supreme Court said that, yes, we agree that the high courts are right. Yes, we agree that the orders wherein the old act is extended, the operation of the old act is extended by a period of 3 months is against the spirit and substance of law. The new act would hold the field with effect from 1st April 2021. However, We believe that there are 90,000 matters, there are 90,000 cases initiated by the central government. We believe that there could be some error on the part of the income tax officers in initiating these proceedings. And because of such a small technical procedural error, the revenue cannot be made to suffer. And therefore, we'll try to strike a balance. And Supreme Court in that desire to strike a balance between the revenues and the assesses, try to find a way, according to the Supreme Court, which is a perfect balance. And this is the judgment. The judgment says now that technically we modify the order of the Allahabad High Court to the effect that all those notices which were issued earlier between 1st April 2021 and 30th of June 2021 would be treated as notices issued under the new regime, under the new provisions. As I indicated earlier, under the old provision, the reasons are recorded before even the proceedings are initiated under section 148 subsection 2. Now those reasons would be treated under the new provision as a show cause notice under section 148 capital A small b. All of us are aware that under 148 capital A, first inquiries would take place under small a show cause would be issued under small b, a response of the SSC would be considered under small c, and a final order wherein either the objections of the SSCs are accepted and the proceedings are dropped, or they are rejected and the proceedings are initiated, would be passed under small d. Now, along with that small d, a notice under section 148 would be issued upon the SSC. Supreme Court said that, all right, we find that notices ought to have been issued under the new provision, but then what is a big deal? You treat the notices which were issued earlier as a show cause notice under section 148 capital A small b. So the reasons which were given to the SSAs along with a notice under 148 are now to be treated as a show cause notice under section 148 capital A small b. The first stage. Supreme Court thereafter said that assessing officer across the country are directed to give material and evidences which were used for the purpose of issuance of this show cause notice within a period of 30 days from the date of the judgment. Kindly mark the date of the judgment is 4th of May, within a period of 30 days. Therefore, by 2nd of June 2022, in all the cases, and let me deviate at this moment. Earlier, there was an ambiguity as regards the applicability of the Supreme Court judgment. A view was, one school of thought was that this would apply only to those SSCs who have approached the various high courts and or Supreme Court. Another school of thought was that this judgment of the Supreme Court will have a pan-India application. CBDT has come out with an instruction putting this entire controversy to rest. They said that because Supreme Court has invoked Article 142 and at more than one place is mentioned that this judgment has a pan-India application, therefore, it applies to all the SSCs across the country, irrespective of the fact whether those SSCs have challenged these notices before various high courts or they have simply accepted the notices and gone ahead with the reassessment proceedings. All notices issued between 1/4/2021 and 30th of June 2021 are now governed by Supreme Court judgment. Period. There is no controversy on that score. At least to that extent, both the SSCs and the revenue would agree. Therefore, coming back to the direction of the Supreme Court said that you treat the reasons which are already recorded as a show cause notice, the notice which is issued under 148 as a notice which is to be considered as having been issued under 148 capital A small b within a period of 30 days, that is by 2nd of June 2022, all the evidences and all the materials in all the cases are required to be supplied to the SSC for which are used for the purpose of issuance of that show cause notice. Now let us pause here for a moment and try to analyze the direction. Look, what does it mean by all the evidences and material? Evidence and material is all, both terms are defined under the Evidence Act. Now, all kinds of material that can be conceived, namely in case supposing it is a case of a penny stock transaction, and if someone is searched in Calcutta and during that search somebody's statement is recorded, that person has accepted that he has indulged into giving accommodation entry in the form of penny stock across the country, and this was the name of the script. Now, all the material, not only the material, namely the final outcome in the form of the order or the direction of the investigation wing, but all the material and evidences which are used for the purpose of reaching to this conclusion that the transaction in question is a bogus transaction or a penny stock transaction, all those materials are required to be supplied. So in case of an SSC, hypothetically, if he has indulged into a penny stock transaction and the reasons say that, sir, you have earned a capital gain of rupees 1 crore for assessment year 16-17, and that capital gain has come to you by way of trading on the floor of a stock market in a script which is declared or held to be a penny stock script, and we have investigation report which says that Mr. So-and-so in Calcutta was raided, his statement was recorded, he confessed that he has indulged into giving various entries in the form of this penny stock, and therefore based on that, in the bank account of Mr. A, we find that your transaction is reflecting and therefore your assessment is being reopened. Then in this case, as per the direction of the Supreme Court, in its true spirit and the keeping in mind the substance of the direction, all this material is required to be given, namely the statement of that person, the diary or the material which is found from that Calcutta based person with the name of the script, the stock market details, the demat account details, if at all this material or these evidences are available with the authorities. If it is not available and the only thing which is available with the authority is the report of the investigation thing, then that report is required to be given. So to the extent whatever material, whatever evidences which are available with the revenue authorities, they are required to be given to the assessing officer. I understand in large number of cases, SSCs have started receiving this information. And this information is mostly in the form of the report of the investigation wing, and the basic documents are still not given. So that is one area of dispute between the SSCs and the department. And that could be again a probable cause for again series of litigations, that what does it mean by evidences and material which is required to be given. Next step, once these evidences and material is given to the SSCs within a period of 30 days or before that, before 2nd June is the last day, it can be given even within a period of 1 or 2 weeks also. The moment the material is given, then from that date, or if the material is not given up to 2nd of June 2022, then from 2nd of June 2022, within a period of 2 weeks, the response of the SSC is required to be filed. Supreme Court has in fact not clarified, but CBDT was kind enough to have clarified now that if you want more time for the purpose of filing this response, you can ask for more time beyond a period of 2 weeks, and assessing authority would be kind enough to grant you more time. However, kindly keep in mind proviso to 149 that whatever time that you consume, whatever time that you take in responding to this notices, it will get added up to your limitation date, and therefore to that extent your limitation gets extended. So therefore, within a period of 2 weeks to be counted either from the last date before which the material evidences are required to be given, or from the actual date from which the 2 weeks SSC's response. Now, supposing in a given situation, there is no material or evidences which is given to you. You don't receive any email by 2nd of June 2022. Then what should you do? My understanding, or in my opinion, you still have to file the objections, keeping or presuming that the reasons which are recorded would be treated as material evidences and or a show cause notice for the purpose of initiating the proceedings. You cannot say that, sir, you have failed in carrying out the first step of the Supreme Court's direction, therefore I'll not carry out the second step of the Supreme Court's direction. That is probably going to be counterproductive. Therefore, my advice and the way I look at it is, if irrespective of the fact whether you receive the email containing the material and evidences or you don't receive the email containing the material and evidences, you still have to file your response within a period of 2 weeks. In this response, you can take all kinds of objections. Supreme Court has not curtailed your right to raise objections against the reopening proceedings. However, the only objection that you can't raise is obviously old regime versus new regime, which is now settled by the Supreme Court. Other than that, you can raise objections as regards facts, as regards law, invoking all provisions and all defenses which are available under the law. Once that response is given to the assessing authority, there is the third step which is prescribed by the Supreme Court, and that third stage is within a period of 1 month from the end of the month in which response is filed, or in a given case where there is no response, then 1 month from the end of the date by which assessee was required to file the response, the assessing authority has to pass the final order under 148 capital A small d. Now again, pausing here for a moment, assessing authority means which assessing authority? Again, there is a diverse view. One view is that in view of the notification of the CBDT dated 29th March 2022, now the assessing authority means only the faceless authority, and the jurisdictional assessing authority has no role to play. Another school of thought is that this was under the old regime. At that time, faceless was not there into the system, and therefore the jurisdictional assessing officer would still continue to hold the field, and therefore the jurisdictional assessing authority is the assessing authority. Again, going by the circular and going by the tenor of the act, my personal belief is that 148 is a procedural section. It is not a substantive section, and procedural section has to be interpreted to have a retrospective effect. Therefore, the moment there is the definition of assessing authority, namely the faceless assessing officer, everything would be done by the faceless authority. And from more particularly from 29th of March 2022, it is the faceless authority which has to do all this compliance of all the Supreme Court directions, and our response also will have to go before the faceless assessing authority. However, while filing the response, one can always take an objection if at all the law gets developed at a later stage to the effect that you are not the assessing authority. In either case, if it is jurisdictional assessing authority, one can say that faceless is the correct authority. If it's a faceless, one can say that it is the jurisdictional which is the correct authority. My opinion, it's the faceless authority which is the correct authority. Moving further, within a period of 1 month from the end of the month in which the response was supposed to be filed or to have been filed or actually filed, assessing authority has to pass the final order under 148 capital A small d. That order could be, if it is the acceptance of the objections raised by the assessee, then it is to the effect of dropping the proceedings. If it is rejecting the objections filed by the assessing authority, then it could be by way of initiation of the next round of the proceedings, namely the notice under section 148 of the Act. At this stage, again, let me slightly deviate. Now, this 148 notice, how would you interpret this 148 notice? Because 148 notice, according to the Supreme Court's direction, can only be issued under the new regime after one crosses the hurdle of 148 capital A. In other words, 148 notice can now be issued only somewhere in the month of either end of June or in the month of July 2022. Now, how do we find out what is the validity or what is the veracity, whether this is beyond limitation period or it has to be treated as within limitation period? Again, there are two school of thoughts. One is, and to me, this is more appropriate an interpretation. one school of thought is that, sir, as per the Supreme Court judgment, Supreme Court said that the notices issued in the first quarter of 21, April to June, are to be treated as a show cause notice under 148 capital S small b. If one looks at the present scheme into the Income Tax Act, one would find that the point of initiation is inquiries under 148 capital S small a. Now, small a is given a go by the Supreme Court. Show cause is small b. The time would stop as per the proviso to 149, the day on which show cause is issued and comments are invited from the SSC. The limitation clock would stop. Therefore, small b, the day small b notice is issued, the limitation clock will stop. That would stop right till the date 148 small c response is filed by the SSC. Thereafter, only 30 days time is given to the revenue authorities for the purpose of passing order under small d. Now, these 30 days from the end of the month again would be counted as having added to the limitation period. And therefore, one will have to relate these notices back to the period during which small b notices are issued. And therefore, for all practical purposes, 148 notices would be presumed to have been issued in the first quarter of 2021. That is how the first school of thought is, that these notices would relate back to the new regime era, that is the first quarter of 2021. The second school of thought is that, sir, you have to look at the date of the notice, and the date of the notice is 2022, sometime in June or July 2022. If 2022 is the date of the notice, then the logical consequence is that some of the years which were otherwise covered up to 30th June 2021 would now be outside the purview of the proceedings, and therefore they are to be treated as barred by limitation. Here we have to ignore the proviso to 149 on the ground that, sir, that proviso can protect you only for a period of 30 days from the date on which your response is filed. It cannot have any impact other than that, and therefore 22 notice has to be seen as 22 notice, and therefore it has to be treated as barred by limitation. Again, this is one area where I see a lot of litigation, and ultimately courts will have to settle down as to what is the correct view insofar as limitation is concerned. But then let us move forward and try to again go back to the Supreme Court direction. Supreme Court again would say that once you carry out these 4 transactions, namely the old notice is to be treated as a new one, elicit the response from the SSCs, consider that, pass the final order, issue the notices, and thereafter again it is open to the SSCs to challenge those notices on various grounds, including the grounds of limitation. Now let us look at some of the finer aspects, that how this provision or how this interpretation of the Supreme Court is going to create a large number of complications, and how the courts would view at those complications, including some of the complications where probably a second round of litigation would arise. Kindly appreciate, there are large number of cases where original notices were issued, SSCs filed objections. Those objections were disposed of by the revenue authorities by passing a speaking order. And thereafter, the SSCs have approached the court. Now, Supreme Court is silent insofar as those categories of SSCs are concerned. Now, the question would be that whether the objection originally taken would be treated as objection having taken under small c, or SSCs would be given as fresh opportunity. My reading is that as per the Supreme Court judgment, they have to be given a second inning, and they will be called upon to file a second fresh objections. Then the question would be, can I now change the objections? Because today I'm at a position which is slightly better off, because Supreme Court said that before you initiate the further proceedings, you must part with the information and evidences in favor of the SSCs. After having received the information and evidences from the assessing authorities, the question could be that now I am better off. I have more information. I have more data available with me and I want to change my stand. Then is it open to change that stand? Then can I take an objection or can I oppose the reopening on a completely different grounds than what I had done earlier? Again, the answer appears to be in affirmative. I can do that. However, those who have already taken the objections and those objections are at a variance with the fresh objections, probably they will find it difficult to explain to the authorities that now why such a variation is there and why such a change in stand is there. They'll have to cross that hurdle. The second problem, and I believe this is going to be an interesting problem, is in what way the notices which were issued under the old regime are going to be justified under the new regime. Because under the old regime, the golden rule was that there has to be a reason to believe, the assessing officer has to have a reason to believe that income chargeable to tax has escaped assessment because of ABC reasons. And therefore, obviously, a prima facie tentative, a preliminary belief, namely a belief which is good enough for the purpose of having a reasonable belief, but not sufficient for the purpose of making the addition, could be a starting point for the purpose of initiating the inquiry. However, now under the new change scenario, the opening words are that in case if any escapement is there, that escapement has to have at the preliminary stages itself. I'm sorry. Now, the word of the statute is that in case if any income chargeable to tax has escaped assessment, unlike reason to believe, and all of you would mark that notices that we have received so far, which are supposed to be notices under 148 capital A small b, they all contain reason to believe. Have a look at the notices. All those notices are in a standard form because ITNS, there is a format for 148 notice, and all those notices have the words because I have reason to believe that income for AY so and so chargeable to tax has escaped assessment, therefore following action. And along with that, you would be given a separate reasons which are recorded. So therefore, the notices which are now to be taken as a notices under 148 capital A small b would have the words reason to believe. Now, to what extent such a stand or such a reason to believe is justifiable in view of the change scenario, where as against the reason to believe, income chargeable to tax has escaped assessment phrase is replaced. And admittedly, such a phrase is not written in the notice. Can one say, or can one revenue authorities argue that, sir, you presume now everything is now being done on a presumptive basis, that old notices to be presumed to have been issued under the new notices. Therefore, you also presume that there is an escapement of income, as against though we have printed reason to believe, but then you presume that there is an escapement of income. Again, it is going to be an interesting issue because the sine qua non for the purpose of 148 capital S small b, if one looks at the language of small b, it says that there has to be an escapement of income. And in absence of there being any escapement of income, there is no question of treating that notice as under b, small b. If look at the reasons which are recorded, all the reasons which are recorded, which are now to be presumed as a show cause notice under small b, even those reasons also will have the words reason to believe. You look at the final the penultimate paragraph, the final conclusion of the reasons. All of you would find it invariably in all the cases, because that was what was the law earlier was, that there is a reason to believe that income has escaped assessment. And there is no question of there is any finding to the effect that income has, as a matter of fact, escaped the assessment. Therefore, that those notices are again going to be challenged on the ground that there is no such finding by the revenue authority. In absence of such a finding, how do I raise my objections? Because small b talks about escapement, and my objections are also against that escapement. This is only reason to believe, and there is no question of any escapement. So that is going to be the second problem. Third problem, as I see it, is under the old scheme, reason to believe could be on account of any ground. It could be on account of the information received from the inside portal. It could be on account of information from another assessing officer. It could be on account of some third-party assessments, cross inquiries. It could be anything. There was no restriction insofar as the source of reason to believe. So the law was well settled that reason to believe is there is no question of there being any information from a specified source. As against that, now we have the law which says under section 148 that no assessing officer can initiate the proceedings unless he receives information from the following sources. And the information is defined so as to include during that period. Kindly mark that we are concerned with the first quarter of 2021. During that period, the law was that information was having a truncated meaning. There were only two sources of information. Source number one, it has to be from the risk management strategy of the CBDT, framed from time to time. The information is required to be flagged under the risk management strategy of the CBDT. And second was that the final objection, audit objection of the CNAG, Controller and Auditor General of India, that can be treated as an information. Now, again, the question would arise that under the old regime, there was no requirement of disclosing the source. So in absence of there being any source on record, can it be argued that, sir, this information is not acquired from the sources which are defined under the Act, namely two sources, CBDT risk management strategy and audit objection. This is a third party information. And once it is a third party information, it cannot be taken cognizance of unless it falls under the broad two categories as I indicated. And therefore, there is no question of any information. In absence of there being any information, which is a cognizable information, based on which a cognizance can be taken, can there be a reopening? Because the law is well settled. In fact, now under the new regime, the law is that yes, you can reopen provided you have information in your possession. And that information, now after 1/4/2022, there are 5 different sources from which information can be acquired. Up to 31st of March 2022, there were only 2 sources. And in my respectful submission or my opinion, the provisions which are applicable would be the provisions which are existing between 1st April 2021 and 30th June 2021. Because if we apply today's provisions, then the notice would be treated as having been issued as on today. If the notice is, as I discussed earlier, that if we presume that 148 notice is issued as on today, then it becomes time barred for large number of earlier years. And therefore, revenue would want that the notices would be treated as having been issued in the first quarter of 2021. Now, if it is to be treated as having been issued during the first quarter of 2021, that is April to June 2021, then the law as existed, as operational, as on 1st April 2021, right up to 30th June 2021 is applicable. And if that law is applicable, then again, information only from these 2 sources. What is more interesting is, look, even under the amended scheme also, these 2 sources remain, though there is an amendment under both these sources. Under the first source, now we have the removal of the word flagged. Information which is flagged in the system, which is devised, which is speaking of the risk management strategy of CBDT. Now, the term flag is not defined under the Income Tax Act. However, one has to give the logical meaning to that term, flag. What is the meaning of term flag? Flagged is identifying specifically. Flagged is you tag a particular item. Now, why such a requirement? Because there are large number of general information which are available by the CBDT, which are available on the inside portal. However, the law earlier was that you don't take cognizance of each and every small information which are otherwise innocuous information. You only take cognizance of the information or item which is flagged. So flagged means tagged, specifically identified. Unless that item is identified or it is held to be such an item where certain more actions are required, you don't take any action. Now the word flagged is removed with effect from 1/4/2022. However, for the purpose of understanding the Supreme Court judgment, one has to keep in mind that the term flagged is very much there in the statute book, and therefore not each and every information, only information which is flagged can be taken cognizance of and reopening proceedings can be issued. Insofar as item 2 is concerned, namely the audit objection, again there also there is an amendment. Audit objection earlier was only from CNAG. Now any audit objection is there. Therefore, even internal audit objection also can work as an information. And the final audit objection earlier, as against that, now any audit objection. So even intermediary audit objections, which may or may not ultimately be finally accepted, even those audit objections can be taken cognizance of. So both these aspects have to be kept in mind while dealing with or raising the objections. My view is that the law as existed between 1/4/21 and 30th June 21 can only be taken cognizance of, and therefore you will have to give a truncated meaning to the term information. That would take me to the last ground, and which is again a hotly contested ground, that how do I reconcile the limitation period? Because limitation again is going to play a vital role in this particular controversy. That how do we decide whether a particular assessment year is within limitation period or beyond limitation period? For the purpose of understanding, let us take it that there are no assessments which are prior to 1314. So 1314 is the first assessment year which is now we are concerned with, which is going to be affected by the Supreme Court judgment. So let us look at 1314 and 1415, because 1314, 1415 both would sail in the same boat. Under the old regime, if the escapement is above a sum of rupees 1 lakh, the outer limit was 6 years. Only in exceptional cases, it was 16 years. And for search and seizure cases, it was 10 years. This is only for the purpose of understanding. However, for the purpose of our example or our understanding of the present Supreme Court judgment, we are more concerned with the first proviso to 149, and 149 talks only about 149 1B limitation, and 149 1B under the erstwhile act talks about the outer limit of 6 years from the end of the assessment year where the escapement is in excess of 1 lakh of rupees. So under the old regime, 1314, if the escapement is above rupees 1 lakh, it would have expired on 31st of March 2020, because we add 6 years to 1314. 31st March 2014 is the end of the assessment year. You add 6 years to that, we'll get a figure of 31st March 2020. However, from 24th March 2020, because of the COVID, etc., the government came out with series of notifications. Initially ordinance, thereafter converted into act, and that act was again used for the purpose of issuance of certain notifications at a later stage. So the limitation period was extended from time to time from 31st March 2020 right up to 31st March 2021. That was the first part. We'll split it into two parts so as to understand the up to 31st March 2021 extension. There is no dispute. From 1st April 21 to 30th of June 21, there is a dispute. SSAs are approaching the courts that, sir, such an extension is not permissible. And for that purpose, you strike down the notification to that extent only, not the entire notification. Kindly mark the distinction, not a single petition, or there is not a single order of any high court which has knocked down the entire notification. The reason is that notification was a beneficial notification. There were a large number of dates which were the due dates for compliance which were in favor of the SSC, and therefore the entire notification was not challenged by any SSCs before any High Court, and there is not a single High Court judgment which has struck down the notification or held the notification to be ultra virus. All that the High Courts have done collectively is the explanation in the two notifications, namely notification 20 and notification 38 of 2021, the explanation which had the impact of extending the operations of the old section 147, 148 and 150. Only those notifications were explanation were struck down by the High Court by holding them to be ultra virus. Some of the courts have given a finding to the extent that even the extension which was given to the erstwhile provisions in terms of time limit for issuance of notice is also bad in law, because those notices cannot be issued once the new act has come into force, and therefore such an extension of time limit is also not valid. Therefore, for 13-14, coming back to the controversy on hand, 13-14, the last day was 31st March 2020, extended to 31st March 2021. So also for 2014-15, it is 31st March 2021, 6 years to be counted from the end of the assessment year. Now, whether this can be said to be barred by limitation, because we have to look at the first proviso to 149. Section 149, as under the new act, says that reopening can happen because under the new act, let me deviate for a moment to understand the provisions of the new act. Under the new act, there are only two time limits. One is up to 3 years, no monetary limit, and nothing is required. Up to 3 years, reopening can take place only after following the process of law. Between the period of 3 to 10 years, there is a condition. Again, there is a variance in the condition. Assessment year 21-22. So between 1st April 21 and 31st March 22, the condition was that there has to be an escapement in excess of 50 lakhs of rupees, number one. And number two, such an escapement must be in the form of an asset. That asset must be reflected in books of accounts or other documents or evidences available with the assessing authority. If these conditions are satisfied, the assessment can be reopened up to a period of 10 years. The problem would be that earlier it was 6 years, now it is extended to 10 years. Therefore, there are 4 years which are now added. The Parliament was conscious that we cannot make the assessees worse off by introducing a new provision under the scheme of the Act, and therefore it inserted a proviso. Proviso said that as on 31st March 2021, namely the last day on which the erstwhile provisions were in the statute book, or to put it in a different manner, on 1st April 2021, when these provisions were introduced into the statute book, namely the extended period of 10 years, if at all the year is already barred by limitation, then that year cannot be reopened. This is in simple terms, if at all any 7th, 8th, 9th and 10th year, which have admittedly become barred by limitation by virtue of erstwhile provisions, those years cannot be reopened under the new provision, because the extended time limit of 10 years cannot put the assessees in a position which is worse off than the earlier position, or in other words, the vested rights which the assessees have acquired for not to have their assessment years reopened beyond a period of 6 years cannot be taken away by way of an amendment. Now, the argument of the department, income tax department, is that, sir, 2013-14 and 14-15, the time limit is extended up to 30th of June by virtue of TOLA initially, and from 31st March 21 for the till 30th of June by way of two notifications. And therefore, we have to look at the last day of limitation as 30th June 2021 and not 31st March 2021. However, the other argument is, the different view is that 13-14 and 14-15 have become time barred on 31st March. Look, TOLA Act, TOLA had a life under the erstwhile Act. the argument is that TOLA would not apply for the purpose of extending the due dates under the new act. Because when TOLA was enacted, at that time, the new act, namely Finance Act 21, was not there. None of these amended provisions were there. And therefore, TOLA had a limited life. And that life was only for the purpose of extending the time limits prescribed under the Income Tax Act in existence prior to amendments made by Finance Act 2021. In fact, this is categorically coming out in notification number 20 of 2021, wherein they say that law has existed prior to insertion of Finance Act 2021, the time limits are extended. Firstly, from 31st March to April, and thereafter from April to June. And therefore, the argument is that TOLA has no application insofar as extending the time limit from beyond 31st March. And the second facet of the argument, which is again more interesting, is that Supreme Court has, in a way, there is an observation of Supreme Court to the effect that in principle, they agree with the view of the various high courts. They approve the views of the various high courts. However, they say that the judgment is modified to the following extent. And then there are 4 directions which are given, and that is the only modification in the judgments of various high courts. Now, these 4 modifications are to the effect that you treat, we have already discussed that, you treat the notices as notices having been issued under the amended act. Beyond that, there is no modification to the orders of the high court. Now, all these high courts have collectively held that explanation, which is there in the notification, is ultra vires. Now, explanation had the impact of extending the operation of the old act. Some of the high courts have also said that the extension of the time limits prescribed under the old act is again not justified for the simple reason that the old act itself is coming to an end on 31st of March. If old act is coming to an end on 31st March, there is no question of extending the limitation of that act. Look, extension of limitation is justified, or it sounds logical, provided those provisions are there in the statute book. Why do I extend the time limit for the purpose of issuance of notice under the old regime if that regime is coming to an end on 31st March 2021? Supreme Court has already accepted in principle that old regime has come to an end on 31st March 2021. Once that finding is there of the Supreme Court that old act has come to an end on 31st March, the logically you can't have notifications extending the date of issuance of notice beyond 31st March when the provision itself has died down on 31st of March. And therefore, the 2 notifications which are having the impact of extending the due date for issuance of notice from 31st March to 30th of June 21, in my humble opinion, are again ultra vires. They cannot have that effect, and therefore there is no law, there is no enabling mechanism, enabling notification which extends the time limit of 13, 14 and 14, 15 beyond 31st March 2021. Once such an enabling provision is not there, then there is no question of reading them while applying first proviso to 149. If that is the situation, then irrespective of the quantum, whether it is less than 50 lakhs, more than 50 lakhs, you can't reopen 13, 14 and 14, 15 period. My view is that you can't reopen 13, 14 and 14, 15. And therefore, those years have become barred by limitation. On two grounds, as I explained earlier, that TOLA has come to an end, and therefore there is no question of notification surviving thereafter. In any case, the notification have been struck down, and that finding is not disturbed by the Supreme Court at all. Therefore, 13, 14, 14, 15 have become time barred. You can't reopen them. Now, coming to the next years, 15, 16, 16, 17, 17, 18. Because these 3 years again would stand on a different footing than the earlier part. The very same argument, revenue is again raising this argument that 15, 16, 16, 17 and 17, 18 is again the time limit under TOLA would make it, would enable it to extend the time limit. But the same argument that TOLA has come to an end and Supreme Court has upheld the validity of all those high court judgments to the extent they have struck down the validity of this extension. My humble view is that these 3 years, 15, 16, 16, 17, and 17, 18, they cannot be reopened unless the quantum is more than 50 lakhs. If it is less than 50 lakhs, there is no question of touching them. If it is more than 50 lakhs, then the question would arise that which criteria are to be followed. Because 15, 16, 16, 17, 17, 18 under the new act can be considered, can be reopened. Of course, they don't fall within a period of 3 years, admittedly, because 15, 16, 3 years would get over in 19, 16, 17, 3 years would get over in 20, and 17, 18, 3 years would get over in 21. Assuming that revenue is right in its submission, that TOLA would extend the limitation period. I don't agree with that, because TOLA would extend the limitation provided limitation is expiring. Look, when there is no limitation which is expiring, there is no question of extension. TOLA was only for the purpose of saving the limitation. It was not that this period would be defaced while computing the limitation period. It was only saving the limitation, and therefore, if at all it is getting time barred, yes, you get extended period. However, 15, 16, the time barring would take place in 22. 16, 17, time barring would take place in 23. And so on and so forth, because you have to add 6 years from the end of the year. And therefore, TOLA cannot come to the rescue of the department. For first reason, that TOLA in any case cannot extend beyond 31st March. Secondly, in any case, TOLA cannot extend the limitation which has yet not expired as on 31st March. Then coming to the third argument, that what if these items, these 3 years, are having the impact of more than 50 lakhs? If the tax effect is more than 50 lakhs insofar as escapement is concerned, can one argue that, sir, now beyond 50 lakhs, we have a 10 years limitation? Admittedly, even if we apply the first proviso to 149, 6 years period did not expire on 31st March 2021. If 6 years did not expire on 31st March 2021, we get extended period of 10 years. And once we apply the extended period of 10 years, then 15, 16, 16, 17, and 17, 18 are also covered. Covered, yes, provided more than 50 lakhs. Then the second question would be that while computing the amount of 50 lakhs, what are the criteria that one has to keep in mind? One has to look at the present act and find out the criteria which are other than the assets, or one has to restrict only to the term asset and not to look beyond the term asset. Again, as I explained earlier, we are concerned with a period of the notices between 1st April and 30th June. And Supreme Court is also very conscious that this judgment has an application only for those notices which are issued between this period. And therefore, even the 148 final notice would be deemed to have been issued within this period itself. Once the notice is issued between 1st April and 30th June 2021, there is no question of reading the law as appearing in the statute book after 1/4/2022, where the 50 lakhs criteria is further expanded. And therefore, one has to look at only at the asset criteria. So that is the only criteria which has to be kept in mind, and one may not have to look at any criteria beyond the asset criteria. And that would lead me to again one more argument, and that argument is, if one look at the asset criteria, and asset criteria again is defined. If I can go back to the asset criteria, yes, asset would include immovable property, being land or building or both, shares, securities, loans, advances, deposit in the bank account. Now, this is the only criteria which is required to be kept in mind. So if today, if you receive a notice wherein, let's say, a credit entry is questioned, or a gain is questioned, or a share capital which is credited is questioned, because here the shares and securities which are mentioned in the asset have to be treated as shares and securities of asset in nature, and not the share capital that you have received. All these items would not be covered within the asset criteria. However, they would be covered under the larger definition. And therefore, they are required to be taken into consideration while raising the objections that, sir, these are the asset is the only criteria, and the items which you are indicating are not falling within the asset criteria and therefore outside the purview. That would take me to the last discussion before we start the question answers. In the last discussion is that again, this is something which is coming up quite frequently, and therefore I'm thinking of addressing this. Applicable to not only in the context of Supreme Court judgment, but also applicable as it is broadly under the new regime. Look, the question is that, sir, what is the consequence, or what is the outcome if there is a change in the stand of the assessing authority? In as much as, let me give you an example, and that example we can have for other situations also. Supposing an SSC has already passed away, that a person is already dead. A notice under 148 has already been issued. We challenge a large number of such cases before the High Court, and High Courts have granted us the relief. In some cases, the notice were issued between 1st April and 30th June. Therefore, old and new regime argument was also taken. Suppose someone is not there. Someone has already been dead when the notice under 148 capital A is issued. In response to that small b notice, the SSC points out that, sir, that so-and-so SSC is already dead, and therefore your notice under 148 capital A small b is bad in law. Again, the assessing authority will ask you a question that, sir, who is the legal heir? And then you are duty bound to give the names of the legal heir. And then ultimately they pass the order under small d saying that the so-and-so SSC has passed away. However, legal heirs are now brought on record. Therefore, we are issuing the notice under 148 in the name of the legal heir. This is one example. It can apply to even a non-existing company also. Or take another case where, supposing there is an inquiry at the initiation stage under 148 capital B with respect to certain bogus entries appearing in your books of accounts. You point out that, sir, these entries are not pertaining to this year. In this year, we have only paid the interest. The entries are pertaining to earlier year. And therefore, there is no question of reopening, because your very basic premise, underlying premise that there is an escapement of income is not correct, because we have never received any such money in this year. So in nutshell, what I'm trying to point out is that small b notice is issued. Once you point out that the notice which is issued is factually incorrect, the jurisdictional facts narrated in the notice are itself not correct, and therefore there is no question of taking that proceedings any further. Can the reopening proceedings survive thereafter? The argument of the department is that this is only a show cause notice. We'll consider your response, and when we pass the final order, we will rectify this jurisdictional defect, and in the order we'll say that in case of a dead person, we are issuing the notice against the legal heir, or in case of a non-existing entries, we'll say that whatever interest that you paid, you have wrongly claimed that interest, and therefore we are trying to reopen on the ground of wrong claim of interest. To what extent this is correct? Because in the present context, Supreme Court judgment also, in consequence to the Supreme Court judgments also, as well as in the normal circumstances, such a situation is going to arise, that there is a change in the stand of the department. To what extent that change is acceptable to us? Again, two school of thoughts. One is that because this is a show cause notice, your response is considered, and this is precisely the reason why the law is amended, and therefore whenever a final order is passed, only that order is to be looked into and required to be taken into consideration for the purpose of justifying the notice under 148. The second school of thought, which is according to me is more logical and it is more convincing, is that, sir, under the new scheme also, there is a requirement under small a that even before you issue the show cause under small b, you have to carry out an inquiry if required. Now, what is the purpose of this inquiry is that you iron out, you find out the correct facts. If a dead person has not come to your notice, then what is the inquiry that you have carried out? Look, you cannot then turn around and say that we were supposed to carry out the inquiry. However, we failed in carrying out the inquiry. We issued the notice based on a particular factual presumption. Now that presumption is turning out to be false. Nonetheless, we assume jurisdiction and we'll reopen. So therefore, the correct view is that all these factual scenarios which I narrated, probably one can argue that, sir, you are supposed to inquire. The moment I point out that your show cause is incorrect on the grounds of recording of incorrect facts, that show cause has to fail. Thereafter, if limitation permits, you can issue a fresh show cause under 148 capital small b, and I may be called upon to file my response. However, in my proceedings, in my pointing out the correct facts, you cannot turn around and change the color of your notice and say that, sir, if not on ground A, we will try to justify the notice on ground B, and therefore you are caught and now face the reassessment proceeding. Friends, this is how I look at the new provisions and the judgments. I think we can have question answers for next 10 minutes before I hand over the stage to Jigar bhai.
Okay, thank you, sir. Now may I request, now we move to the question answer sessions. May I request Rashesh Shah sir and Pragnesh Jagaseth sir to raise questions and reply by the Tushar Hemani sir. Sir, to Rashesh sir.
Thank you very much. My question is, SSC filed ITR for assessment 1516 under section 44 AD. He, along with other co-owners, purchased agricultural land of 45 lakhs. In his notice under section 148, AO considered it as unexpected investment. Transaction of purchase of the land that is no taxable and nowhere required to disclose in ITR. His contention of the AO is correct or not?
44 AD would not. Yes. Do I answer?
SSC agriculture is, or SSC has filed a return under section 44 AD, and he is not required to disclose the investment.
I understand, but then look, there is the cause of action is tangible material in the form of information received from a sub-registrar's office. If there is an information which is received from a sub-registrar's office, and if there is a belief on the part of the revenue authorities that such a huge investment, how the investment is made when there is no such capital which is shown, revenue would be entitled to look into the affairs of the SSC. Having said that, one can always raise an objection that, sir, these investments are not required to be disclosed in the return of income, and therefore there is no question of escapement of income unless you at least prima facie record a finding that these are unexplained investments made by the concerned SSC out of undisclosed sources. If such an objection is raised, then probably one can argue before the court of law. However, prima facie, if there is no scrutiny assessment which have taken place, and if this is the ground on which proceedings are initiated, I personally believe that it is not a case worth pursuing before, at least before the court. One can raise this objection before the assessing authority.
Yes, so the second question from an anonymous attendee is whether bogus purchase above 50 lakhs is alleged income escaping assessment. Then can we argue that the alleged escapement is not represented by an asset?
You can argue. It's an interesting issue. And my personal belief is that bogus purchase is not covered.
Okay.
Yes.
Okay. Rashesh bhai, would you like to?
In case of the notice issued under section 140 after 31st March 2021, in many cases the SSC didn't file a return of income. And even if the SSC filed a return of income, the reason recorded were not provided to SSC. Then how he will reply to the notice issued under section 148A, deemed notice issued under section 148?
Now, material and evidences would be given to the SSCs.
Yes, but without reason recorded.
Right, but then material, because 148 capital A notice itself is a small b notice. Now, small b notice, unless those notices are supplied to you, you can't raise the objections. However, in the material and information which is furnished to you, if you can discern somehow that these are the grounds on which it is reopened, you can file your response. Otherwise, you can ask for it, because Supreme Court has said that all documents and evidences are required to be shared, including the basic reason.
Now, second question. The case can be reopened if the information is flagged. Now we are receiving the information, and there is the under the information there is the date of downloading of the information. We are not so sure when the information was uploaded into the system. So when the notice is deemed to be issued during after 30th March 21, if the information is not flagged into the computer, whether the case can be reopened or not.
Very difficult to answer, because we don't have control over when the information is uploaded. However, I'll tell you, there is a notification dated 10/12/2021, 10th December 2021, notification number 225, wherein CBDT has directed that for assessment year 15-16, information is required to be uploaded before 20th of December 2021 in that notification itself. And there are a large number of criteria which are defined. So if one wants to find out and become Sherlock Holmes that when this information was uploaded, then one can look into that notification and try to find out. But this is not the ground on which I would suggest that you challenge the proceedings. Rather, you challenge it on the ground that whatever information is there, that is not coming within the purview of information as existed during that period.
Because most of the information has been uploaded into the computer after issue of the circular by the CBDT on 10 December 2021.
Yes, and that was to be done before 20th of December. So my reading is all these information have been uploaded between these periods, 10th and 20th of December 21.
That is, we can have a good case before the tribunal, not before the High Court.
Not before the High Court.
Yes, of course. Thank you.
Yes, sir. There's a chartered accountant is asking a very long, lengthy question, but in nutshell, it is for assessment year 13-14 and 14-15. That wherein in that case, a notice under section 148 is issued subsequent to order under section 148 small d. Then what is the validity of that notice, and what are the options available to the SSC?
Notices can be held to be barred by limitation, and one can file a writ petition before the High Court. As I've explained earlier, 13-14, 14-15, probably we have a good arguable case.
There's one anonymous attendee who has asked whether penny stock cases are covered by an income represented by an asset.
Asset alone is not, because ultimately the income has to be represented in the form of an asset. And if at all penny stock is there in the form of stock, then shares and stocks are part of the asset. If at all it is already converted into some money, and one can argue that that money is lying in the bank account, then also again the definition of asset would cover bank and bank balances, which is undisclosed. So therefore, penny stock, in my humble opinion, is not an asset. Penny stock is an entry which is again added under section 68 as per the departmental authority's view. And if that is the case, then probably one can argue that it is not an asset.
Perfect. Rashesh bhai?
Thank you, sir, for your kind words. Now the second sessions will start.
Before that, let me take this opportunity to thank everyone. I thank all of you for giving me this wonderful opportunity to, during this vacation period, refresh my knowledge on the subject. Very nice of you. Thank you very much.
Thank you. Thank you very much, sir.
Thank you, sir.
Sir Bhai, on behalf of Southern Gujarat Chamber of Commerce and Industry, we are very much thankful to you for sharing wonderful knowledge, especially on the recent developments, which is causing a lot of confusions. So, and your experience and your vast, well-read knowledge has definitely helped all the audience. And I'm sure whenever Chamber will ask for your second session, you will be very much ready to come with us and join us and to share knowledge once again. So thank you so much again. So nice of you.
Now move to the second session. I would like to share with you Swami Vivekananda's famous quote: "True guidance is like a small torch in a dark forest. It doesn't show everything once, but give enough time light for a next step to be a safe." With this quote, now may I request to the chairman of SGCCI, GST committee member, Mr. Mukund Chauhan sir, please introductions to today's learned speaker, Jigar Shah sir.
Good afternoon, friends and participants on this webinar. The Supreme Court judgment in the indirect taxes are equally interested like the Supreme Court judgment for the direct taxes. And to explain us the judgments of the Supreme Court for the indirect taxes, which are the landmark judgment, not other than with us is the Jigar Shah. આમ તો જીગરભાઈ શાહ મારા બહુ પરમ મિત્ર છે, વર્ષોથી અમે એકબીજાને જાણીએ છીએ અને પર્સનલી ઇન્ટ્રોડક્શનની કોઈ જરૂરત નથી, પણ આ ટાસ્ક મને આપ્યું છે ટુ ઇન્ટ્રોડ્યુસ જીગરભાઈ શાહ ફોર ઓલ ઓફ યુ. That is why I am introducing before you the Jigarભાઈ. Mr. Jigar Shah is a fellow member of the Institute of Chartered Accountants of India and law graduate from the Gujarat University. Mr. Shah has experience of dealing with indirect tax laws for many than a decade. Mr. Shah is a member of the Committee of the Indirect Taxes, Gujarat Chamber of Commerce and Industry since last 7 years. Mr. Shah is also a member of the Indirect Tax Committee of Ahmedabad branch of Institute of Chartered Accountants of India. Mr. Shah is regularly conducting seminar and lecture in certificate course conducted by the Institute of Chartered Accountants of Indirect Taxes. Mr. Shah has contributed many lectures in seminars organized by the Institute of Chartered Accountants across Gujarat. Mr. Shah is regularly appearing before State Ahmedabad and Gujarat High Court and has rich experience of consulting Indian corporate groups and many MNCs. At present, he is working as a partner in Lakshmi Kumar and Sridharan attorney at his Ahmedabad office. So such a dynamic personality is with us, and he will explain us the landmark judgment of the Supreme Court. And I will welcome to the Jigar Shah. Jigar Shah, now the floor is yours. Please explain in a very simple way so that we can understand the crux of the judgment.
That I
Very
will,
difficult to understand by reading the judgment.
that is correct, sir. And so many propositions. See, each and every paragraph has some proposition, like from the who can be called as a recipient, whether you have to regard the contractual terms between the parties or the legal provisions will prevail. What we understand is that understanding of the parties between the in the contract, and then from those facts we will apply the law. Now in the Supreme Court in this decision, because it's a larger bench decision, it will have a very wide implication, and the new propositions are coming out of this decision. So they have said that apart from the contractual understanding between the parties, the legal provisions can be applied. So not only the indirect taxes, but for all these disputes, this proposition will prevail. So I will try to explain this in a simple way as you have desired, sir. And I would like this session to be as interactive as possible. So long as the flow of the session is maintained, everybody is free to ask any question at any time. There is no problem. I'll just share my PPT. Kindly enable. Okay, now it's. I hope it's visible, sir. My screen is visible.
Yes, yes.
Okay. So this is the agenda today. We'll just, and I will also take you through the history of this dispute so that we can have a better understanding. Now, so far as the first decision for today's discussion, that is of this Mohit Mineral, it's a judgment of a 3-judge bench, larger than a constitutional bench of the Supreme Court. The basic challenge before the Supreme Court was the decision of the Gujarat High Court, where the Gujarat High Court has held that there cannot be any levy of GST under reverse charge mechanism on the importer of the goods so far as the ocean freight charges are concerned. Now, why this dispute arose? There are two ways of importing the goods into India. Generally, as per the International Chamber of Commerce, there are various ways of understanding a contract between the parties. Like one, which was before the challenge before the Gujarat High Court as well as the Supreme Court, was CIF contracts. CIF contracts means cost of the goods, insurance, and freight. Everything is included in the price of the goods. So, say for example, an Indian importer in India, he wants to import some goods from US, and the US exporter says that I will charge 100 rupees, $100 for these goods. Then it includes cost of the goods, insurance of the goods, and the freight. So the Indian importer simply receives the goods in India. He does not do anything else. Everything, the arrangement for the shipping, arrangement for the transit insurance, all those things are on the shoulders of the US exporter. This is called as a CIF transaction. This was the under the challenge, and this is the mode of import has been considered by the Supreme Court. Another one is FOB contracts. FOB contracts means free on board. In that case, the US exporter will say that the moment the goods are loaded on a vessel in a US port, his responsibilities are over. The transit insurance and the freight has to be arranged by the Indian importer. So Indian importer is at liberty to engage a foreign shipping line or an Indian shipping line to bring the goods from US to India. Once the goods come into India, he will file the bill of entry, pay customs duty, IGST or whatever is applicable, and then release the goods. In a CIF contracts, the goods are the responsibility of the US exporter to reach the goods to Indian port. Then the Indian importer will file the bill of entry, pay customs duty, IGST, and release the goods. These are the two ways of doing this transaction. And as I said, that CIF transaction was before the Supreme Court as a dispute. Let us go a little back to understand that how this all happened. We all know that from 1st July 2012, in a service tax regime, they introduced the concept of negative list. In a negative list, whatever the activities are mentioned in the negative list, they are out of the purview of the charging section itself. Because the charging section itself says that there shall be levied a tax at the rate of 12% on all the rendition of the services, except the items mentioned in the negative list. So charging section itself did not apply to the negative list. If you look at section 66D, which contains the negative list, subclause P, 66 capital D, subclause P says that services by our transportation of goods into India up to the customs station is falling into negative list. This continued up to 31st May 2016. From 1st June 2016, they removed this from the negative list. At the same time, they added one item into mega exemption notification. That transportation of goods in an aircraft. In a negative list, vessel and aircraft both were there. In the exemption list, only the aircraft was there. So far as the levy of service tax on this ocean freight is concerned, there was no such clarity. Prior to introduction of the negative list regime, there are decisions of the sea state which has said that ocean freight is not a service and cannot be taxed. But that was a category-based taxation, may not be applicable after the introduction of the negative list. So this is the history. Now what happened in January 2007, like as I said that in a CIF contract, generally what happens, the US exporter will engage a foreign shipping line because he is there, he may be knowing the shipping lines there. Indian shipping line complained to the ministry. They said that we are losing the business. You are not charging any service tax on a foreign shipping line. They are coming here, delivering the goods. we will be losing our business. There should be a level playing field. If suppose the Indian importer engages us in a FOB contract, we go to US, load the goods, come back to India. Since both of us are in India, the Indian importer and the Indian shipping line, we have to pay service tax on this, because so far as the place of supply of these services is concerned, is the destination of the goods. The place of supply of these services is a destination of the goods. This position was there in the service tax regime. So far as this GST is concerned, as per section 39 of the IGST Act, the destination of the goods is India. Therefore, the destination of the goods is also the place of supply. So the Indian shipping line complained to the ministry, government. They say that there is no level playing field. Foreign shipping lines are earning business. They don't pay any tax. Whenever we are engaged, then we have to pay tax on this. So you create a level playing field and charge service tax or do whatever for this business. In January 2017, the government issued a notification that services are provided by the foreign shipping line to non-resident exporter. There, service tax will be levied under reverse charge mechanism, and who will pay the tax? Because foreign shipping line, they may not pay tax here, they are not registered here. Who will pay the tax? They say that the shipping agent. A shipping agent is a person who is providing the services to the vessel owner, shipping line. He is not concerned with who is the importer or exporter of the goods. He is only concerned with the shipping line. He is called as a shipping agent. So the notification said that under reverse charge, who will pay service tax? Shipping agent will pay the service tax. This continued. Section 68(2) of the Finance Act, he said that they enable the government to issue notification and notify any person who will pay service tax under reverse charge mechanism. Service tax provision was so broad, any person can be notified. And this is some factual difference is there in a service tax provision and a GST provision. GST provision says that only the recipient can be made liable to pay tax under reverse charge. Now here, the shipping agent, he is not the recipient of the service, but section 68(2) was so wide that even the shipping agent can be notified as a person liable to pay tax. This position continued from January 2017 to April 2017. By the time we were knowing that GST is coming, but however, government thought it fit to tinker with the law and they issued another notification. The notification was amended, reverse charge notification was amended to say that instead of the shipping line, shipping agent, now the importer will pay tax. He is the recipient of the service. The reason was, if suppose a shipping agent is paying the tax, nobody is getting the credit. He is not the recipient. This is not an input service for him. He cannot get the credit. Importer, maybe because of him, it can be considered as an input service, but since he is not paying the tax, credit is not available. So after the 3 months of the introduction of the levy on the ocean freight, it was changed to the importer, so that if the importer pays the tax, he can get the segment credit also. That was the idea. That continued from April to June 2017, and from 1st July 2017, as we all know, GST was introduced. So this was a dispute. In GST, what happened? Sorry for this. I'm sorry. This ocean freight is paid directly by the foreign exporter of the foreign shipping line. This is what we have understood. Now come to the fourth bullet. Now this is the provision under the GST law. Entry number 10 of the notification number 10 of 2017. The importer was made liable to pay tax. This is the notification under the IGST Act, which notifies the reverse charge mechanism that who has to pay the GST. So the importer was made liable to pay tax on the above transportation services provided by the foreign shipping line. Now, why this virus was challenged before the Gujarat High Court? There is a section 5.3 and 5.4 of the IGST Act, which is pari materia with section 9.3 and 9.4 of the CGST Act. It says that a government can notify the class of supply on which the recipient of the supply can be made liable to pay GST. Who can be made liable? Recipient. So they say that importer notification says that importer will pay the tax. Consider this as a CIF contract because that was the only transaction which was under consideration by the Honorable Supreme Court and Gujarat High Court both. In a CIF transaction, the US exporter engages the foreign shipping line. So he is the recipient. So the SSC challenge, importer challenge this levy that I am not the recipient of the supply. I cannot be made liable to pay tax because the recipient is somebody else. Section enables you to notify only the recipient of the supply, not any other person. And therefore, this notification is ultra virus, the section itself, and therefore it is challenged. So that was the challenge before the Gujarat High Court. Now, what Gujarat High Court held? Gujarat High Court held that importer is not the recipient of the supply. Section enables you only to notify as a recipient. He is not availing the services of a transportation of goods. He is not even paying the consideration because the person who pays the consideration can be considered as a recipient of the supply. He is not doing anything else, and therefore this entry is ultra virus. He said that no tax is leviable for the services where both service provider and recipient are located outside India, non-taxable territory. There is no territorial connection with this levy. Service provider is a foreign shipping line, he is outside India. Service recipient is also a foreign supplier of goods, exporter in US, he is also outside India. So India cannot levy GST on this. That was the reason that it is said that entry number 10 of this notification was declared as ultra virus because the delegated legislation was going beyond the section. That was the proposition laid down by the Honorable Gujarat High Court. Now the another dimension of it. Dual levy of IGST cannot be imposed. That is IGST paid on import of goods, inclusive of ocean freight. As we have now understood that what can be called as a CIF contract. CIF contract is the cost of the goods, transit insurance, as well as the freight. All these things are combined. Now, so far as the import of goods is concerned, read with the Customs Tariff Act, what happens when the goods comes to India? As per Section 14 of the Customs Act, customs duty is payable on a transaction value. Transaction value includes all these charges: cost, insurance, freight, loading, unloading charges in Indian shore, all those things prior to importation of the goods. Whatever the expenses you incur, that is, you have to pay customs duty on that. So the importer pays customs duty on that. On the same value, he also pays the IGST as import under Section 5.1, proviso to Section 5.1. So the Honorable Gujarat High Court held that you are already levying the GST on this, which includes the ocean freight. Again, you say that he has imported the services. That is not permissible. There cannot be dual charge, dual levy on the same transaction. So this was held by the Honorable Gujarat High Court and levy was struck down. Now, Revenue filed the petition before the Supreme Court. And of course, the notification was held as ultra virus. So it was very obvious on the part of the Government of India, Union of India, to go before the Supreme Court to settle the controversy. Now, if you what are the arguments by the Revenue? Revenue says that Section 2107 read with 24.3. 24.3 deals with compulsory registration. Section 24 of the CGST Act deals with compulsory registration. It says that person required to pay tax under reverse charge, person who are recipient of the service, they have to take registration compulsorily. And a notification specifically identifies the importer as a person who is liable to pay tax on a reverse charge basis. So the argument was, it's not a person required to pay tax. It's say that person who are recipient of the service. So notification specifically identifies the importer as a person who is liable to pay tax on a reverse charge basis, and therefore the levy is valid. He need not be even the recipient. That is what the argument of the Revenue. Section 13.9, which deals with determination of place of supply, it says the destination of the goods. So the destination of the goods is India. On a CIF contract, India importer is in India. Therefore, there is a nexus. It cannot be said that there is no territorial nexus. So that was also the argument. And Section 293C, which says that who can be called as a recipient of the supply. If you look at Section 293, it says that clause A says the person who is paying the consideration is a recipient. Then B deals with the supply of goods without consideration. Then it says that person who is consuming the goods is given the possession of the goods without consideration also can be considered as a recipient. And a C clause C is dealing with the where the no consideration supply of services. A consideration goods or services. B no consideration services. C no consideration B no consideration goods. C no consideration services. This is how the section is worded. So they say that where no consideration is payable for the supply of a service, the person to whom the service is rendered. So the argument of the revenue is that ultimately the service is rendered to the Indian importer. So he is the recipient of the supply. Since he is the recipient of the supply, he is very well fitting into this notification and the scheme of IGST law as a recipient of the supply, and he can be made liable to pay GST on that. Just to what was going on when this was the point was raised before the Honorable Gujarat High Court also. What the argument was the SSC was that there are three clauses A, B, C. Suppose you identified one place that he is the recipient, he is paying the consideration, because of course the consideration is paid in this transaction. Consideration is paid by the foreign exporter who is situated in US exporter. So he is the recipient of the supply. And there are A, B, C, three clauses defining the recipient. And if suppose it falling into A, then there is no need for going into B or C to find out that who else is also the recipient. Okay? That was the argument, and it's logical also. Let's see what happened before the Supreme Court, because that is very, very important now, because how you will interpret this type of provision, that also will be a question now. So in a CIF transaction of import of goods and IGST on ocean trade, independent levies and not qualify as a composite supply. They pitched into the aspect theory. We know aspect theory that one transaction having a different elements of the services that can be taxed twice, and there are some decision in case of this supply of tangible goods for use. In some of the cases, the SSC has paid the VAT on that. Supreme Court has held the service tax is also payable, vice versa. All those things can be possible because there are two dimensions. One is a deemed supply of goods, another could be of a services. Because it's very, very difficult to understand the aspect theory. So the Union of India pitched into this argument that it's a independent levies. He imports the goods is a one transaction. At the same time, he avails the services by a foreign shipping line as a recipient of supply is another transaction. Therefore, on a both, he is required to pay GST. That was the argument by the revenue. Now, what the SSC said. That government cannot specify the person liable to pay GST under RCM through a notification, because the reverse charge mechanism is also defined. As the primary argument was that the only recipient can be notified as a person liable to pay GST, because section 5.3 and 5.4 of the IGST Act, which is pari materia with section 9.3 and 9.4 of the CGST Act, which says specifically says that only the recipient can be notified as a person liable to pay GST under RCM. Okay. The section is not wide as wide it was in the Finance Act 1994. Section 68(2) says that any person notified by the government can be made liable to pay GST. But that was not the case here. Here it specifically says that recipient. So the Indian importer is not the recipient, therefore he cannot be made liable to pay tax on this. No taxable event for a levy of GST, no supply of goods or services for a consideration by the importer, because he does not pay any consideration. So he cannot be made liable to pay GST on this. Section 13(9) says that relevant to determination of place of supply and not the recipient of supply. So there can be a place of supply of goods because the destination of the goods is in India, but that does not determine who is the recipient of the supply. Since the Indian importer is not the recipient of the supply, he cannot be made liable to pay GST on this. And maintain the integrity of composite contract, because there is a composite contract. He purchases the goods on a CIF basis, cost, insurance, freight. In a simple terms, if I have to explain this, like we have in a domestic transaction, contract as X factory, X go down. So suppose somebody is supplying the goods to you on a X factory, X go down. So you arrange for the transportation of goods to your factory. When he is selling on a FOR basis, then he delivers the goods to your factory. So this is the difference between CIF and FOB, the same transaction. So this is how he says. And SSC says that since it's a composite supply, this already once the levy is there cannot be any another levy on that. What Supreme Court held in this says that Section 13(9) provides that a place of supply of service by way of ocean transportation is a place of destination of the goods that is in India. Therefore, there is a nexus between the levy and the territory. So it's not that the section is operating extraterritorially, and therefore the levy is otherwise valid. In the present case, the destination of goods in India where the importer is taking the delivery. So there is a nexus, and therefore the levy is valid. Essence of the supply of transportation service is made to the importer, and he will be deemed as a recipient, even though contractually he is not. Supreme Court has specifically observed that contractually he is not the recipient, but we will go beyond the contract. So this proposition will come in future also, wherever the law has to be interpreted, whereas it is to be interpreted as per the terms of the contract between the parties, or to give some meaning to the legislation, the court can go beyond the contractual terms and to hold that person is liable to pay tax or not liable to pay tax. This will create some problem in time to come. So is that the essence of the supply of transportation service is made to the importer, and he will be deemed as a recipient. So even though he is not the recipient as per the contract, Supreme Court held that he is the recipient, and therefore the notification is not ultra virus. I have not included in my presentation and discussion the another important proposition they have laid down about the authority of GST Council, that whether that will be binding on the states or the union, because the recommendations of the GST Council, the issue was, because if you look at charging section itself says that the government on the recommendation of the council can issue the notification for the rate and all. So that was the point raised by the Union of India before the Supreme Court, that once the council has recommended and these notifications are issued as per the recommendations of the council, so that cannot be challenged because that is binding. That is what the argument of the revenue, and that led to some discussion about the power of the GST Council. At this point of time, I will just say that yes, they have detailed analysis about the constitutional provisions and the powers of the GST Council. They have gone to the history. They have said that in 2014, what we are looking at today is the constitutional amendment which was introduced in 2014. Prior to that, also in 2011, a bill was moved in the parliament. At that point of time, there was a specific provision. It says that the recommendation made by the GST Council would be binding. But however, when they introduced the amended bill in 2014, then specifically all those provisions were removed. There was, in a present amendment in the constitution, there is no such mechanism. It says that if there is a conflict between the law of a state and the law of a union, so how this will be resolved? They say that it should be amicably resolved, but there is no such effective mechanism given. All those things are there. And the Supreme Court has held that whatever the recommendations of the GST councils are there, it is not binding on the parliament or the state legislation. So that has triggered some debate in the professionals and political circles. It says that what would happen, suppose tomorrow one state is ignoring the recommendation of the council. So what would happen? That would lead to the chaos. And the Honorable Supreme Court has in this decision also referred to some articles which I have already mentioned, that if suppose this recommendation of the GST Council is not followed by the union or the state, then it will lead to a chaotic situation in India for so far as the GST is concerned. I don't know, many of you may be aware also that in January 2021, the state of Maharashtra has issued one circular that whatever the circulars are being issued by the Central Board of Indirect Taxes and Customs, these are not binding on the state. State will examine the legal validity of those circulars, and if it is found in consonance with the law, then only it will be implemented. So this already has started in way back in January 2021. After this decision, what will happen, we don't know in tomorrow, because there are so many debatable items which are coming to in GST purview, like online gaming, lottery, all those things they are debating, and a huge revenue is involved. So who gets the maximum share of the revenue, all these things will be debated. We have still to introduce these petroleum products, crude oil and all in the GST regime. So all those things will go on, and it will be really a challenging time for if suppose some state or the union takes a different view on the recommendations of the council. So basically, the Supreme Court has said that the impugned levy is everything is held against the SSE. Recipient, time of supply, place of supply, validity of the notification, everything is held against the SSE. Only on one point, they have agreed with the finding of the High Court. Ironically, sir, this High Court has not gone into the concept of the composite supply in entire decision. It is for the first time in Supreme Court, you will find some discussion on the concept of a composite supply. They have referred to the definition of composite supply and said that since the SSE on the same supply, which includes the transportation cost, like a freight cost, on which he pays the customs duty and he also pays the IGST, therefore, it will be a dual levy. And for that reason, they have said that this ocean freight is not taxable so long as the SSE has paid the IGST on a import transaction. So that's the saving point in the entire decision. Otherwise, this entire decision is against the SSE. They say that Indian importer is already paying the GST on this as a composite supply. So there is no question of any another import of services, and therefore levy is not sustainable. And hence they have said that separate levy on Indian importer for the supply of services by the shipping line would be in violation of Section 8 of the CGST Act, which says that in a case of a composite supply, it will be treated as a supply in the main supply. So in this particular transaction, the composite supply, the supply is of a goods and not of a services, and therefore this levy will not survive because it would be in a violation of Section 8 of the CGST Act. Now, what would happen after this? Because there are issues like somebody has paid the tax, avail the credit. Somebody has paid the tax, avail the credit. Because of the inverted duty structure, credit is getting accumulated. Some has paid the tax, avail the credit, utilized also. Many of the SSE not paid the tax at all. What would happen in all those situations? That we will discuss. So if GST has been paid, then the following scenarios will emerge. Credit has not been availed due to outward supply being exempt, because you are availing this for the exempted products. You are not eligible for input tax credit. So credit itself has not been availed, but tax has been paid, because otherwise you are liable to pay tax. Credit is availed, accumulation is there because of the inverted duty structure. Credit has been availed and credit has been utilized also. So what would happen? Can refund claim be filed in the above scenarios? Because we have a section 54 in the CGST Act, which says that any refund is to be filed within 2 years from the relevant date. In this case, the relevant date could be when you made the payment of IGST. So within 2 years, if you file the refund claim, then it is within the time limit. And of course, you will have to pass through this unjust enrichment. So we will discuss this all this scenario. Credit has not been availed because your supply is exempt supply. So you are not availed the credit. In that case, you can claim the refund. What we are advising to our clients is that you file the refund claim because this levy has been held as a non-existing ultra virus from 1st July 2017. In many of the cases, refund could be for this 1st July 2017. Then the revenue will say that Section 54 of the CGST Act is not only limited to the GST wrongly paid. It says that any amount paid and the SSE is seeking the refund, the time limit of these 2 years will be applicable. In contradiction to this Section 54, Section 11B of the Central Excise Act says that Central Excise duty. So there it was not any amount, refund of Central Excise duty and interest paid thereon. That was the wording. So SSE can argue if this was a refund of excise duty, to say that since it's not, the levy itself has been hailed as an ultra virus, non-existent, so it cannot be considered as a payment of GST. So if suppose it is mentioned that any GST, if you are seeking refund of any GST, then it's not a GST. It's like a deposit with the government. You can claim the refund without any time limit. Our section is different. Section 54 says that any amount. So this time limit of 2 years will be applicable. Our suggestion is that whenever you are advising your client, advise him that file 2 different claims, separate claims. Whatever is pertaining to within 2 years time limit, you file under 54. Whatever is going beyond this 2 years, you make a separate refund claim. So that if you file the refund claim from 2017 to till date, then it will happen like they will reject the entire refund claim saying that it's time barred and your entire amount will stuck up and you will not get the refund of this. So it's better that whatever is permissible under section 54, you file the refund claim accordingly, and whatever is going beyond, you file a refund claim separately, so that only that amount you have to contest. Now, relevant to note here that the Supreme Court, in a case of this 9-judge bench of the Supreme Court in case of Mafathalal Industries Limited, they have said that whenever the levy has been struck down as an unconstitutional, then the time limit under section 54 or section 11B for that matter should not apply. However, that will be a challenge in this case also. Revenue will challenge, revenue will not accept this. So it's a better to advise the client to say that file refund claim in 2 sets separately. Whatever is falling within 2 years time limit, you go with that first, and then whatever is going beyond that, file a separate refund claim so that only that has to be contested. And of course, there will be a question of unjust enrichment. Whatever the amount you are seeking refund, so you will have to say, you will have to prove by documentary evidence that this burden of tax, whatever you have paid, is not passed on to any other person. Generally, what happens when the SSC thinks that this will be given to me as a refund, then in those cases, this tax receivable is created so that it's not getting charged to the profit and loss account. A provision is created, a receivable is created. So that would be a sufficient proof that this unjust enrichment is not there. So that can be done. And if no GST is paid, what should be done? In those cases, you can say that in any case, GST was not payable. Now you have a favorable judgment of the Supreme Court in your hand. So if suppose department litigates this issue, now so far as the GST is concerned, you are safe because the Supreme Court has said that GST is not payable. So those who have not paid, they are on a better footing. They don't have to claim any refund and pass through this time limit and unjust enrichment. Now, can credit avail be questioned on the ground that no tax was payable? Many of the SSCs, they have paid the tax. They have availed the credit also. Now government will say, because they need a reason to litigate with you. Now they will say that since the credit itself was not available, tax was not payable, you paid and you availed the credit also. So whatever was not payable, in past also this has happened. Some exemption available. However, the supplier is not going by the exemption. He is charging the tax. SSC avails the credit also. GST department says that we will disallow the credit to you on a ground that the supplier should have claimed the exemption. So all those things have come in past also. There is one good judgment passed by the Gujarat High Court in case of Nahar Granite, where the Honorable Gujarat High Court has said that when the supplier paid the tax, you did not go to him and tell him that, sir, you don't have to pay tax. You merely accepted the tax paid by the supplier. When it came to a credit at the end of the recipient, now you are disputing this credit. That cannot be tolerated. So if you have accepted the payment of tax by the supplier and the recipient is availing the credit, you cannot deny the credit to him. So on that basis, the credit was also allowed. So that logic argument, according to me, will be still valid in this case also, that despite of the fact that now the Honorable Supreme Court has held in favor of the SSC to say that tax itself is not payable, then the credit also cannot be denied to the SSC. That is what my view is. Issue will be there, but yes, I feel very strong case to argue. Now, impact of this judgment on service tax litigation on the same issue. The service tax petitions are already there, but during the course of hearing, all these petitions were detached from this batch of appeals, batch of petitions. So service tax, they were not decided, but I could see some observation of the Supreme Court on this. And according to me, the case in the service tax is very, very difficult, because they have said that section 68(2), they have compared the section 5(3) and 5(4) of the IGST Act and section 68(2) of the Finance Act 1994. And there is some observation, not the ratio, it's an arbiter of the Supreme Court. They have said that provisions in service tax are very wide. Any person can be notified as a person liable to pay tax. So in service tax, even the shipping agent and subsequently the importer was notified as a person liable to pay tax. Perhaps that would be held good. However, there is one case of a sea state Mumbai in case of United Shippers. Then what happened? The importer imported the goods, but many times what happens that the mother vessel is so large that it cannot come into the port area. So the mother vessel will be parked in the mid-sea, and the goods will be imported through the small barges. So this barges service provider are Indian service providers. The revenue department asked them to pay service tax under cargo handling services. So the service provider says that I am not supposed to pay service tax on this because I am providing the services before the importation of the goods. Once the goods are imported, the customs duty is paid on the value, whatever I charge as a consideration for my services. And since the customs duty is paid on this, all these things are getting embedded for the valuation under the Customs Act. There is no separate element of services remaining there, and therefore service tax cannot be demanded. On this point, on a valuation under the Customs, Section 14 of the Customs Act, United Shippers, the Mumbai Tribunal held in favor of the SAC. Subsequently, the State Mumbai's region has been approved by the Supreme Court also, not in a very detailed speaking order, but simply the SLP filed by the revenue was dismissed with the observation that they do not find any ground to intervene in the order of the C state. That's the order. So if suppose that logic is continued in service tax, then perhaps that matters will be survived. But in a first reading of this judgment of the Honorable Supreme Court in Mohit Minerals, it appears that there will be a greater challenge in a service tax matters. Now there will be a many things like you may come across certain situation that department has audited the SSC, and they have said that since the service tax was not paid from April 2017 to June 2017, now under the audit para must have been raised, show cause notices are also being issued. In some cases, the DGCCI is also investigating the matter. In those cases, the revenue is invoking the suppression, willful misstatement on the part of the SSC, and extended period of limitation of 5 years is invoked. According to me, you should advise your client to file a detailed and a valid reply against the show cause notice. You have a very strong case on a limitation, because since the issue has been a levy once has been struck down by the Honorable Gujarat High Court. Suppose tomorrow Supreme Court holds in favor of the revenue, then also you can argue that this case is arguable. There is no suppression involved on the part of the SSC, and therefore the extended period of limitation should not be invoked. In most of the cases, if they have issued the notice after 15th of February 2000, I believe, yes, after 15th of February 2020, then all those show cause notices will be time barred. So you can successfully argue those notices. Only on the ground of time bar, even if on merits the matter is held against the SSC. Now, is there any possibility of a retrospective amendment? We have a special provision so far as this online database access and retrieval services. Section 14 of the IGST Act deals specifically like the foreign service provider has to come to India, take registration and discharge GST liability. Considering the observation given by this and the point on which the SSC has succeeded, the government will have to amend the definition of a composite supply, which is otherwise seems to be very, very difficult. Otherwise, there is no need for any retrospective amendment, because for all the aspect, these observations are in favor of the revenue against the SSC. So personally, I don't see any possibility of retrospective amendment as of now. So this will continue to hold for at least considerable time. Whatever you have done, you can choose to continue the same position for the next few months. If the GST has not been paid, don't pay in going forward also. You did not pay because now the decision is in your favor. If GST has been paid and the credit can be utilized, continue to paying sometime because it's a revenue situation for you. See how department reciprocates on this, and then you can take a call. And another thing is that can similar position be adopted for royalties and other remittances expenses made in connection with import of goods? Test of composite supply. How this comes? When you are importing the goods, you are availing the services of these foreign shipping lines. You are also availing the services by the Indian port authorities. Like say, for example, you import the goods in a Kandla port, and the Kandla port trust will charge you something. If you import in Mundra port will charge you something. Can you say that all these things, if suppose these expenses are incurred, you don't have to pay tax on this because it's a composite supply of import of goods? The test of composite supply is applicable when the same supplier is supplying more than 2 taxable supplies. In this type of cases where royalties and other remittances, there are 2 suppliers. One, your foreign exporter, foreign party who is supplying the goods to you, and the services are provided, royalties and other remittances are provided by somebody else. So there cannot be composite supply because there are 2 suppliers, not 2 supplies. And therefore, this test of composite supply will fail there. In my view, in all other cases, royalty and other remittances tax should be paid. That is what my view is. Now, what will happen to the cases where there are non-taxable supplies, like a petroleum products? You import petrol, diesel, LNG, crude oil, aviation turbine fuel, on which the GST is not payable. You pay CVD at the time of import. So whether this decision will apply to those cases also. In my view, in a non-GST, non-taxable supplies, this decision will not apply because they have held only in favor of the SSE for the composite supply. Composite supply, the definition of composite supply in the GST Act says that more than 2 or more taxable supplies. Now here, there is no taxable supply, like it's because it's a petroleum product, crude oil, gas, etc. So in those cases, it will not apply because it's not a composite supply. Since it is not a composite supply, you don't pay IGST at the time of import, you pay CVD. So in those cases, this will not apply. Those importers who are importing non-taxable supplies, they will have to continue to pay GST on this. IGST on ocean freight services. Now, what would be the case in case of exempted supplies? IGST exemption is granted like an agricultural commodity. According to me, in those cases, still this decision will apply for the reason that all these things are taxable. The agricultural commodities are made exempted by way of an exemption notification. At a first place, they are taxable supplies. They are given an exemption by virtue of an exemption notification. Merely because they are exempted by way of a notification, they don't cease to be a non-taxable, the taxable supplies. They are still taxable supplies, given exemption by way of a notification, and therefore, even in case where you are importing agricultural commodity, you don't pay IGST, then also this composite supply principle can be applied. You need not pay tax. So far as this one of the supply is exempted supply, and still you want to hold as a composite supply, our Gujarat High Court decision in case of Torrent Power is there, where the Torrent Power was supplying the services in the case of a transmission and distribution of electricity, which is otherwise exempted by way of a notification. They were charging some other charges like a cable shifting charges, some miscellaneous charges, meter rent charges from the recipients. GST department said that you have to pay a GST on all other charges except the transmission and distribution of electricity. Circular also said the 1st March 2018, they issued a circular that you have to pay GST on this. That circular was challenged before the Honorable Gujarat High Court, and Gujarat High Court got a very detailed order considering the definition of this composite supply, bundled the supply in case of negative list regime, and prior to that, the classification of services, all those things have considered and they have held that so long as it is a composite supply, even though there is a goods which are services which are otherwise exempted supplies, but otherwise they are taxable, principle of composite supply will apply. And for all other charges, incidental or ancillary, torrent power need not pay GST on that. So that matter is in favor of the SSE. There also, the one of the supply was exempted supply. The same logic can be applied here also. You can say that for agricultural commodity also, it's a composite supply and therefore no GST is required to be paid. It's a supply of goods. Now the greater aspect is, as I said, that section 293 defines recipient of the CGST Act. He says that the person who is paying the consideration, and generally we also understand, like I pay for the supply, then I am treated as a recipient of the supply. So I will be held as a recipient of the supply. Where no consideration is given for the goods, but goods are made available to someone, the definition says that he will be treated as a recipient of the supply. Same thing is with the services. So the Honorable Supreme Court has said that even in this particular case, the recipient of the supply is a foreign exporter. But since the services are made available to you, I will hold you as a recipient of the supply. So even though I am not a supplier, I am a recipient, by deeming fiction, I am held as a recipient. This section 293, I precisely remember the argument of the SSE was that why there is a mentioning that no consideration is payable for the goods and services, and then also they can be considered as a recipient. The reason was there is a branch transfer. I am in my head office is in Gujarat, but I have branches across India. For the purposes of GST, by virtue of a deeming fiction in section 25(4), my branches are considered as a distinct person. But for the purposes of a company, I am supplying goods to my branch in Maharashtra. By virtue of the deeming fiction created under GST law, I am paying GST. Otherwise, I am saying he's not going to pay me any consideration. My branch will never pay me any consideration. So the other clauses of section 293 were meant for this purpose and not to create another deeming fiction that you can be also a recipient even if you don't pay the consideration. That was the logic. But however, that argument is not recorded in the order. Supreme Court has said that another person also can be recipient. So there will be a situation that one will be claiming that I am paying the consideration, therefore I am the recipient. But the goods are sent to someone like a job worker. Can he claim that I am also the recipient of the supply? There is a significant departure from the Sandwich Credit Scheme and the section 16 of the CGST Act for availing the input tax credit. If you want to avail this as a recipient, you have to treat that as a supply. There should be a supply to you as a recipient. Now, the person who is purchasing the goods will say that I am the supplier, but the goods are sent to job worker. He has been given this as a free of cost for consumption. He also can be claiming that I am also the recipient. I can also claim the input tax credit, which would go against the principles or the feature of the GST law. And in time to come, this type of disputes also will come. That is what I feel. And impact of treating beneficiary as a recipient, ignoring the contractual understanding between the parties, is also a significant proposition. This is going to create trouble in time to come for all those transactions where the court will go beyond the contractual understanding between the parties. They say that since we are interpreting this law, this can be done going beyond the contractual understanding between the parties. It's a very dangerous proposition laid down in this particular decision. I would say it will create more litigation in time to come. Now, sir, if suppose someone has any question for this, so far as this particular judgment is concerned, we can take up. Otherwise, I can move forward also. No problem. Whatever is convenient to the participants. Dipesh, sir?
Yes,
you would like to take this question as a session, sir, right now, or we can move forward for the another decision?
Yes, sir. Move forward for the another decisions, please. Sir.
No problem, sir. I will move forward then, sir. So this is the decision of the Honorable Gujarat High Court. and it is pertaining to real estate industry. 2-3 propositions are there in this judgment. The prime challenge on this decision was the inclusion of a value of a land in the construction services. So, and also one matter which arose from the Surat only in case of this Dipesh Naik or something, where the plotting scheme were held as a taxable supply under the GST law. So when you are selling the land, that is also amenable to GST. That was the issue. And also I will take you through the third issue, which was like a sleeping dragon. And now after certain observation in this particular case, that dragon has been awakened now as a more possibility of disputes with the GST department so far as the valuation of the construction services is concerned. The petitioner in this case purchased a piece of land. There are two values mentioned in the document: value of the land separately available and the value of the construction. The same developer was selling the land and he was also providing the construction services on that same plot of land. SSC said that since I have a separate value of a land available with me, the GST law can levy GST only on the value of the services. He cannot go beyond this. GST department said that we have a mechanism. We have a para 2 in the rate notification number 11 of 2017 central tax rate notification. He says that in a case of a construction services, the value of the land will be deemed as a 33% of the total consideration and balance will be deemed as a value of services. So we are charging the GST on that value. SSC said that your mechanism is arbitrary. SSC demonstrated before the court that, say for example, I am purchasing a 5,000 square yard plot and 1,000 is the constructed area. So as per the GST rate notification, I will get the deduction for the land only 1/3 of the total consideration. Now consider another case where the another SSC is purchasing 2,000 square yard plot. He is also getting only 1,000 square yard as a construction. He will get the deduction as a 1/3 of the total value of the consideration. So it's arbitrary. In both the cases, the same constructed area is given to the recipient, and there is a mechanism which creates a discrimination between two class of the SSC, two same SSCs. So therefore, this entire mechanism, valuation mechanism, is ultra virus the section itself. Which section? Section 15 of the CGST Act, which says that value of a taxable supply. It says that the goods and service tax can be charged on a gross amount charged for the supply, where the price is actually paid or payable is the sole consideration, and the supplier and the recipient are unrelated with each other. What can be charged to tax under the CGST law is the value of a supply of a goods or services for both. Since by this mechanism, by giving the ad hoc 1/3 reduction towards the value of the land, you are stepping towards the restricted area, and therefore this levy is ultra virus and needs to be struck down. That was the case. Another case, this was case 1. Another case was plotting of a land. SSC has a developed plotting scheme. He's selling the plot of land. Of course, some common amenities are created, like a clubhouse, internal roads, drainage, water, all those facilities are created. But there is a specific stipulation in the contract itself which says that all these facilities, amenities are for enjoyment of the recipient. These are all not supplied. What is supplied is only the plot of land. So SSC challenged the order of the appellate authority of advance ruling, saying that since it is levying the tax on a land which is not permissible for the central and state to levy tax on the GST, and therefore it is ultra virus. These are the two cases there before the High Court. SSC said that if you look at section 7, section 7 is the supply, definition of supply. Section itself says that whatever the items are mentioned in the Schedule 3 to the CGST Act, which says that land and building, these are not treated as a taxable supply at all. You cannot levy tax on this. So since it's a value of the land, therefore you are violating Section 7(2) read with Schedule 3, and therefore it is ultra virus. That is what the case of the SSE. SSE said that wherever there is a separate value is available, you give me the deduction up to that, and rest you can charge. Now this is the finding by the Honorable Gujarat High Court. Gujarat High Court says that Parliament has sought to levy GST only on supply of goods and services. GST cannot be levied on value of land. Deeming value under the notification, which is going beyond the section, and it is arbitrary. Why it is arbitrary? Because it creates a discrimination between two same class of SSE. And that is also without any basis. A person who is purchasing a plot of land, 5,000 square yard, same area of construction, 2,000 square yard, same area of construction, one is paying more tax. So it's creating an arbitrary. Therefore, it is violative of Article 14 of the Constitution, which says that equality. So on that ground, the levy was held as unconstitutional. They referred to the GST Council meeting and say that when this discussion was going on before the council, they were very well aware of this situation. And if you look at the past, like in a second last bullet, Suresh Kumar Bansal, the levy was challenged before the Honorable Delhi High Court on a construction services itself. He says that you have given a definition of a works contract. You have given a mechanism to arrive at the value of taxable services under the valuation rules. But nowhere, because in a works contract, essentially what happens in a building construction contracts, works contract, what happens? The value of the land is also getting transferred to the recipient. Since you have not given any mechanism for evaluation of the land, that levy cannot work. In a Suresh Kumar Bansal, the Delhi High Court held in favor of the SSE. By the time we came, because this decision, Suresh Kumar Bansal's decision forced the government, central government, to amend the valuation rules in February 2017 with a retrospective effect. And why it was done? By the time February 2017, we all knew that in August 2016, the constitutional amendment has been passed in the parliament, in the Rajya Sabha also, and GST is coming. In February 2017, we may not be fully aware that GST will be implemented from 1st July 2017, but there were some media reports and some news here and there was making noise that this can be implemented. Even then, the government was also conscious that GST is coming. But then February 2017, they amended the works contract valuation rules with a retrospective effect to give the deduction for the value of the land also. Okay. So this is the checkered history. Another point which I would like to bring to your notice, as I said that it's a sleeping dragon. I am sure that many of the persons sitting here as a participants, you know that 2013, Larsen and Toubro was the judgment which ultimately examined the provisions of the VAT law of a Karnataka, state of Karnataka and state of Maharashtra, that this building contracts and the K. Raheja's decision was in doubt, and it was referred to the larger bench of the Supreme Court. And the Supreme Court, larger bench of the Supreme Court in case of 2013 L&T held that building construction contracts, when a tripartite agreement is entered, land is also involved, also can be considered as a works contract. And they upheld the levy of a works contract tax under the state of Maharashtra and state of Karnataka. But in that decision, they touched on one point, that at what point of time you can say that I am providing the construction services to the recipient. They say that once you enter into the agreement with the recipient, and from that point of time, you are providing services of a works contract to the recipient. Okay. Now, in this particular decision, this 2013 L&T has been discussed. They have also taken a note of the point made by the finance minister of the state of Maharashtra. He says that we do not have only one point for dispute with the SSE, that's a value of land. But we have another point also, that at what point of time it can be said that I am providing the works contract services to the recipient. because, and he specifically referred to the 2013 L&T judgment, and says that in this particular judgment, it has been held that the services can be taxed only after there is an agreement with the customer. And he proposed that we will have a difficulty in ascertaining the value, because at what point of time the customer is entering into agreement with the developer builder is very, very difficult to ascertain. And that's the reason that he gave the 4 slabs, that depending on the construction, completion of the construction, we should give the deduction of a percentage basis to the supplier, and we should charge the tax only on that value, which is after the agreement. Now, that point has been touched in this decision. Tomorrow, suppose one customer comes to your client, developer builder. Your client says that I will charge 100 rupees for this apartment. But by the time he is charging, because ultimately he has to recover all these costs, whatever the cost he has incurred. But the works contract services will be considered as a provided only when he is entering into the agreement with the SSE, the recipient. So the developer will say that total cost is 100 rupees. But by the time you come to me, I have already completed the construction work of 50 rupees, which is services to self. I have provided services to myself. I have not provided services to you. You entered at that point of time when only the work worth rupees 50 was there. So I have provided the services to you only for 50 rupees. This also will be a dispute. Because that point, our rate notification even today is not considering this aspect of the matter. So tomorrow, if suppose somebody is challenging this, that you cannot tax me on an entire value of 100 because I have entered into the agreement with the customer after considerable work was completed, you can still stay with GST on this. In my view, because this is specifically noted, they have noted the proposal given by the Finance Minister of State of Maharashtra. They have considered the 2013 L&T and they have held so. So that is what my observation is that. Now, another point is, so far as this plotting of land is concerned, this decision is considering only the developed plot of land. Because there are 2-3 places it is specifically observed. Generally, that is not happening in the industry. What happens in the industry? The moment the scheme is launched, the plotting scheme is not fully completed, but you start giving the plots. You start taking the booking amount at least. I have a serious doubt because this decision is only considering the developed plot of land. It is not considering the underdeveloped plot of land. And in para 88 of this decision, the Honorable High Court has specifically considered that if the scheme is underdeveloped and the services are being provided by someone for a development, then it will be taxable. Only saving point in this. So in my view, the Dipesh Naik judgment, the only saving line is it has been quashed. So there is no ruling so far as Gujarat is concerned on this point, because that was the ruling, the appellate authority. Now that is not in existence. So that's the only point that that decision is quashed. But so far as the underdeveloped plotting schemes, the issue will still crop up and it can create some trouble. Now, client will come to you. How will you advise the client? That you will ask him to follow this Gujarat High Court decision, or you will ask him to wait? Because the another point touched upon by the Gujarat High Court is this. Gujarat High Court said why it is ultra virus, because under section 15(1), gross amount charged for the supply of goods or services of both. Since you are going beyond that, tax is not, the levy is ultra virus. Subsection 4 of section 15 says that if the value is not determinable under subsection 1, then the government will frame the rules. In this case, value is available under subsection 1. So subsection 4 cannot apply. Subsection 5 of section 15 starts with non-obstant clause. It says that notwithstanding anything contained in section 1, subsection 4, the government can specify the rules by manner prescribed. Revenue also argued that under section 15(5), we have a power to say that 1/3 is the value of land. The High Court said that look at the language of section 15(5). It says that in a manner prescribed. Now, if this prescribed is also defined in the Act, it says that prescribed by way of a rules. It is not by way of a rules. You have issued a notification and therefore it is not as per the manner prescribed. And therefore, this reason also, this notification was rate down. It's not a struck down, it's a rate down. And I will explain you the meaning of struck down and rate down. Why? Because if the levy is struck down, then no one can follow this paragraph 2 of the notification. But court has rate down because this will apply in a very limited circumstances where the value of land is actually available. There, the paragraph 2 will be rate down. Government will be forced to levy GST only on the supply of goods or services, not on the value of land. So that is the difference, because if they are struck down, then nobody can follow. So even where in those cases where the value of land is not separately available, like in a apartment, generally undivided share of land is given, but the value is not given. So in those cases, still paragraph 2 of the notification will apply. 1/3 deduction towards the land can be obtained because that levy is not struck down. It's simply rate down in cases where the value of the land is separately available. That's the difference. But now, since we have discussed this Mohit Minerals case, I request all of you to just read once again this paragraph 94 of the Mohit Minerals case. Why I am saying so? Because there is an interesting observation, and I seek your pardon to say so. In my personal view, this Munjal Manish Bhatt's judgment of the Honorable High Court is impliedly overruled by the Supreme Court decision in case of Mohit Minerals. You will ask me a question that how you are connecting these two decisions, because they are totally different issues. Okay. Now, Supreme Court has considered section 15.1, section 15.4 and 15.5. That was the argument of the SSE to say that, sir, we have a section 15.5 which says that if something has to be done, is to be done in the manner prescribed. And manner prescribed means prescribed by way of a rules and not by way of a notification. Gujarat High Court also held so, that it cannot be done by way of a notification. But in a Mohit Minerals case, para 94 Supreme Court specifically says that don't stretch this argument to that extent. Even though 15.5 says that in a manner prescribed means it is manner prescribed by rules or by notification, it's okay. The whole base of the Gujarat High Court decision was that since the value is available under 15.1, 15.5 you have power. But since you have not exercised your power properly, therefore we'll go by 15.1. Now Supreme Court says that in 15.5, because 15.5 starts with non-obstant clause, notwithstanding anything contained in subsection 1 or subsection 4, government can notify, government can prescribe the manner for valuation of certain supplies. So government will say that I have, because Supreme Court says that I can do by way of a notification also, which I have done. Therefore, this decision of Munjal Manish Bhatt is impliedly overruled by Mohit Minerals case. Possible to say. Therefore, my suggestion is that don't advise the clients so aggressively. Whatever has been done, let it continue for some time. Wait for the development in this type of things, and then you can take a call. This also will come on surface, and something will be there, some development will be there in another 5-6 months. But this is what my view is.
Sir, only 5 minutes.
Only 5 minutes.
Yes, sir.
No problem, sir. Then what I will do, sir, I will take up because this Northern Operating System, the third decision I am going to take, is applicable only in a case of MNCs, where the expatriate from foreign country comes to job for India, and there the taxability was there. The Supreme Court, in considering the various definitions of service tax, they have held that it is a case of a supply of manpower services, and you should pay tax. The only thing is that many people, they followed the earlier decision, and one of the decision was SAP was dismissed by the Supreme Court in favor of the SSE on the same point, to say that tax is not payable. Many people would have taken a call in GST law also that tax is not payable, because the same logic with the service tax would apply here. But now the things are changed. So those expatriates will be treated as a manpower supplier by the foreign company, and you will have to pay GST. Because in all these cases, companies where expatriates are coming, there is some export of supply of goods or services, and you can claim the refund also. It's a completely a revenue neutral situation. So in GST, that's the only effect of this decision. I don't think in Surat it will have a larger implication, but whomsoever is raising the query through SGCCI, I will reply to those queries. So I will end my session and I will keep it open for any question answer, sir.
Present, there is no questions in the chat box. So the question answer sessions conclude. Now may I request Mr. Kamlesh Pandya, sir, please to propose vote of thanks.
Well, respected chairman of the chamber, our most valued invited professional businessmen, ladies and gentlemen. It's my privilege to have been asked to propose a vote of thanks on these occasions. Being a member of Income Tax Committee and GST Committee on behalf of the SGCCI and the entire other supporting association, namely Southern Gujarat Income Tax Bar Association, Southern Gujarat Commercial Tax Bar Association, Chartered Accountant Association Surat, Society for Tax Analysis and Research, All Gujarat Federation of Tax Consultant, Income Tax Bar Association Ahmedabad, Valsad District GST Practitioner Association, and office bearers of the respective association. A very much thank you to CA and Advocate Jigar Shah sir for your good efforts towards analysis, discussion, and applicability of recent decision of Honorable Supreme Court in case of Mohit Minerals, Munjal Manish Bhatt. We had discussion on ocean freight matters in our chamber itself before 2 or 3 years ago, sir. And you at that time also told, I remember, that it is none of the matter that it ocean freight is going to be washed in coming times. I must mention our deep sense of appreciation for explanation, analysis, and applicability and excellent coverage of the subject. I'm also thankful to CA and Advocate Tushar Hemani, our earliest speaker, for his efforts towards analysis of provision of reassessment and applicability of decision of Honorable Supreme Court recently given in case of Ashish Agrawal, which is applicable to almost 90,000 SSCs spread over all over India. I must thank him for sharing his deep knowledge on the subject to the webinar stakeholders. I also wish to express gratitude to both the speakers for providing encouragement on the subject. We all are inspired you. Great words of both the speakers. And last, I thank to all professional businessmen, ladies and gentlemen, members of the SGCCI, all members of the respective association for participation to the webinar to enrich knowledge and amendments. Thanks.
Thank you very much, sir. Thank you very much for this opportunity.